We had that positive close on the dial last night, and that was despite some mixed company results coming through. We had Goldman Sachs disappointing the market. We had, after the bell, Apple coming up with quite strong numbers. We also had some housing data out. What's been driving this momentum that we're seeing coming through to our market today?
Stephen, markets are being driven by the housing permit numbers out of the States, which caused copper and Brent oil to move higher overnight, and really just a drive. And obviously with Bulletin coming out this morning saying that the output for iron ore is up 16% for the previous quarter, really positive. You see commodities running harder on the day, just following a move to riskier assets, and we're seeing that possibly some investors are looking at diversified miners, which are expected to give good returns in the next 12 months.
We'll get back to Billiton in just a moment. Maybe looking at those housing numbers, because we had housing starts out yesterday. They were disappointing. They were a bit lower than expectations. You're talking, of course, the higher applications for building permits rose by 2.1%. That was against expectations of a 0.2% rise. So is this really indicating that we are going to see in the future building activity resuming there in the residential sector?
Stephen, I think what's important when you look at those numbers, it looks like, you know, it's always an indication that hopefully that a bottom has reached and that we're going to start seeing a turnaround, and that demand for copper and oil is going to be on the increase. It is very positive for them, especially since with the United States, the housing funding has come off, so very positive for them.
Volatility is still really the name of the game, though, because we are seeing these swings in the markets. Of course, tonight we have the US Fed Chairman Ben Bernanke speaking to Congress as the semi-annual review. What's the market looking for there?
I think, Stephen, the market's looking for some positive or reaffirm the Fed's plans to help grow the economy, and obviously in terms of rates, and if there's any news out on rates, that will be positive. But really, what is Ben Bernanke going to be doing for the economy going forward? Are they going to see good growth numbers for the next 6 months?
And of course, we know in the minutes from the previous Federal Reserve meeting, there was some caution just about the effect the European Union could have in the United States, particularly with trade between the two continents, just with the slowdown we're seeing in Europe. Do you think that's something that's likely to be alluded to again by the chairman?
Possibly, Stephen. I think what's important is we need to see what the results come out from the Euro banking a little bit later in the week. But we are in a global economy, and one must be cautious in terms of expectations, what we're going to see this afternoon. But I think what will be important is, are we going to see steps for the US economy returning back to growth and helping the consumer?
Well, following those results out yesterday from Goldman Sachs and from Apple, we're also looking at numbers from Coca-Cola, Wells Fargo this afternoon, so a couple of big hitters again. Well, what's your impression just on the results we've seen coming out of the US so far?
Stephen, of the 42 companies that have issued results, we saw 11% of them beating the analysts' forecast in terms of net income, and only 3% beating analysts' forecast in terms of revenue. Still fairly early in the game. We've got some big numbers out today. We've got Morgan Stanley, we've got Coke, and we've got Wells Fargo. So very big companies reporting. That's really going to set a sentiment for the afternoon.
Looking at some of our own companies, Woolworths trading statement this morning, it says group sales for the year to June rose 10.5%, comparable store sales rose by 5.7%, and yet full year earnings expected to rise by between 45 and 55%. So on the face of it, it looks pretty good, Yolanda.
Yes, even those numbers, very good. It just shows that their strategy, in terms of their apparel strategy, moving in a different direction, and as well as their food, they're definitely doing something different with their food, and that's really taking market share. They are achieving better performance from their competitors. One, however, thinks that it's really in the price at the moment. Woolworths is trading at our one year target price. So investors need to be cautious around that, because it will be after the World Cup and or the supposed hangover of the World Cup, we're going to have to see how retailers are going to perform in the next 6 months. But well done to Woolies. We really like the strategy. They've done a massive turnaround. And if anything, Woolworths is a company that is going to benefit if we do see a very strong 6 months for the rest of the year.
Of course, we see the gains on Woolworths today lagging the overall market up by just 0.5%. But as you said, the price is quite high at the moment. It's risen by 40% so far this year to 25 Rand. And of course, really indicative of the whole retail sector, where they are all trading on quite high PEs at the moment, aren't they, Yolanda?
Yes, Stephen, in terms of the sector, there are a lot of risk to the numbers that we're going to start seeing in that. In terms of food retailers, very, very low food inflation that we're seeing out of the food sector. And we think that investors have kind of moved into your ShopRites, your more defensive counters, but we feel that it's going to probably disappoint with retail sales, especially in the food sector, probably coming off, and that the apparel sector is going to do better than the food sector.
Well, perhaps just touching on that BHP Billiton production report that was out this morning, you mentioned it a little bit earlier, and we see shares in BHP Billiton up by over 2.5% today. And it seemed quite cautious in its outlook, though it did allude to China, to growth coming through from developed countries not looking very strong. What was your impression on that update?
Stephen, BHP is always quite cautious. I think it's only fair to be cautious. We've seen this massive run up from China, and many have said it's restocking, rebuilding of inventories. We saw the Chinese government stepping in to kind of pull the economy back to prevent it from overheating. So quite cautious there, but many believe that the Chinese have the attitude that we're going to build up while stocks are cheap. So cautious in the next 6 months in terms of the inventory rebuild, but also just the strategy of building up so that they can take advantage of growth in 2011.
Of course, we have those shares up 3% today, trading just above 220 Rand. For the year as a whole, though, BHP Billiton still down by about 9%. Is there still a buying opportunity for BHP Billiton?
Stephen, I think that it's definitely a good buy for BHP Billiton. We could see it go up to 250 Rand and reach its April highs. It offers, it's a less geared stock in terms of your diversified miners, so therefore it does really, really well in the long term, and I think it's going to outperform the other diversified miners.